So we're pretty much back with another one. We're going to go over how we executed and how you could have done the same and explain to you guys essentially how you guys can actually trade in a profitable manner and just take advantage of these little confluences that tend to happen from a day-to-day basis, like the sweeping of the Asian and Asian high and Asian low. And usually if your bias is bearish and price is playing out to be bearish and the Asian low has yet to be taken and the high has already been taken, that's just an added confluence that we're going to go and take that. So I'm just going to go over what trade we took and we'll see how you could have done the same. So first of all, coming into the day, we need to analyze what daily bias is, right? We need to understand what direction that the price will be going. So we clearly can tell here, right, that the daily structure is what? Bearish. We go up, down, up, breaks of structure coming left and right. Now that we know that, what we need to do is scale down further so we can observe what the lower time frame structure is and whether or not price should be trending lower or higher, right? So what do we do here? We notice that one, price makes a light up. We have this doji here. It could be considered as a 4-hour break of structure. So let that even be. But we do know that price is generally moving up. We have this bearish order block that price reacted off of and broke 4-hour structure right here. So we are bearish on the 4-hour, correct? So now what do? We keep on trying to understand what low time frame structure looks like so that we can have an accurate view on what price should be doing on the 1 minute. By knowing where we are in the higher time frames, we can use that bias to predict what's going to happen on the low time frames and catch insane RR trades. So what do we know here? Coming into New York Open, which is around 8 a.m., we have hourly structure being what? Bullish. But we are coming into what? This hourly supply zone, lack of a better word. We could also call it the high that was made before we expanded lower to break 4-hour structure right here. And how do we say that? We just mark this out as a break of structure, right? And then we also have the area at which we had the accumulation take place for this move that caused that. So what do we need to invalidate this hourly structure that's being built up right here? We need to see 15-minute bearish structure, because if the hourly is bullish and the 15 minutes bearish, at least you have a good chance at taking that hourly structure in the opposite direction. But if you have 15-minute bullish, 1 hour bullish, what are the odds that the hourly is just going to flip magically? No, you need to get the signs of that on the lower time frames. So what does that mean? We notice that when news comes out at 8:30, we sweep liquidity extremely nicely, right? What do we also notice? Well, the first trade that we took was we noticed that we had a 15-minute break of structure right here, and we were reacting off of a fair value gap, right? And we saw this as the area at which we wanted to enter. And we scaled down and said, okay, give us a 5-minute reaction, which it did. And we entered somewhere within here and we got stopped out. News came in and swept us out. What do we do next? We said, okay, 15-minute structure is what at this time? I knew that this 15-minute did not close bullish. We'd have to close above here. We finally closed above here at that point, at which I said, okay, I need to see invalidation of lower time frame structure to allow for me to go short. What does that mean? I need a 5-minute break of structure. And where did that occur? It occurred right here. When I saw that 5-minute break of structure and the retest of this order block right here that caused the 15-minute break of structure, we had a break of structure here. Remember, I just talked about that? At that point, I see, okay, we react off of the bullish PDRE and invalidate it with a break of structure to the downside. I executed off the next fair value gap and targeted the previous days, well, this day's Asian low. And once you do that, the result is just imminent. It's nothing crazy. It's something to be expected. And we hit 2 take profits and 1 break-even point. We saw this. We revisited the fair value gap after this break of structure. And we hit 2 take profits out of the 3. Secured about 2.5 RR on a 4-hour trade. Great way to finish the week. And in essence, why did we know that? We knew this order block right here was reacted off of. So if I react off this order block and start reacting off of this bearish order block right here to then go ahead and break structure here, odds are that means that bear structure is going to be maintained because we are just invalidating what we just saw here, the bullish PDRA. So what happens? Boom, fair value gap, off the reaction, we enter. Trade goes all the way to take profit 2, good RR.